What's going on, everyone? Welcome to another video with yours truly. Before I start, I just want to express my gratitude for you guys, because honestly, like, I am blessed to have you guys essentially in my life. I have a family, a community of people that are just trying to better themselves, spreading love, positivity, uplifting each other, being nice to one another. Because at the end of the day, like, we all have the right intentions. We're all working really, really hard, and we're all just working towards bettering ourselves. So it's like we found a community online where we are surrounded by like-minded individuals, and it's a blessing, man. It's really, really awesome. And another thing I want to talk about, the comments from last video. You guys are hilarious, man. Yeah, man, I'm not white. And you guys are really, really funny, man. I was going through the comments, dying, laughing. And yeah, man, I'm just really blessed and honored that you guys take the time out of your day to watch these videos. And I'm really, really blessed and humbled that I can help. And yeah, man. So yeah, man, thank you. So in today's video, we're going to go over the SPY. We're going to talk about the NASDAQ, and there's some really weird stuff going on in the market right now, and we're going to talk about that. So definitely stay tuned. We're going to talk about the entire, crypto market, IWM, the 30-year bond, and all that good stuff. All right. So without further ado, let's get started, man. All right. Number one, Friday morning, I said that, the plan for today was essentially I was going to buy into dips on the NASDAQ. So the NASDAQ opened up at like 352. Tons of weakness. Everyone was super, super bearish. And I was saying that there is no sense of buying puts into this extreme weakness. I think that the NASDAQ is going to retest 358 today. And that's exactly what happened. We bought into calls, and those calls ended up going for 30% intraday. The calls that we bought the day before also were profitable. So the NASDAQ ended up hitting 361.50. So obviously, my premonition was correct. And definitely, if you aren't following me on Twitter, definitely follow me on Twitter. I post everything there completely for free. So it's not like you're missing. I mean, you're not losing anything. So that's basically where I share all of my trades and ideas essentially live. So definitely go ahead and follow me there. Let's go ahead and take a look at the SPY. All right. So number one, the SPY held this 200 simple moving average and the 10 simple moving average literally on the dot. It held the 38.2% fib. Let me zoom in here. It held the 38.2% fib literally perfectly on this support, and it held this trend line that we've been monitoring as well perfectly. And then we came intraday. The SPY essentially moved up 10 points, and it moved up all the way to essentially 453, which is a crazy, crazy intraday move. But this does look bullish, but there's a lot of weird things going on in the market. So right now, from a technical standpoint, yes, the SPY closed above this trend line. That's exactly what I thought would end up happening. When we were trading over here, So when we were trading up here, I was saying it would be very, very likely that the SPY could come back to test levels of support, consolidate a bit, and then continue going on higher. Right now, that's looking really, really weird to me. So that's why Friday into the close, I didn't alert any swings. I was not sure about what was really going on. So number one, you can see that the MACD is, first of all, this yellow MACD line, the momentum has shifted, and it's clearly moving upwards. So that is a good sign. But now this blue MACD line is falling, yet we had a bit of a green day. So that is showing upward momentum, right? This RSI, it's moving upwards as well. It's really not the cleanest setup to go long or short. And really, it's, again, we had a great year. We had an amazing few weeks, right? There's no point of forcing any trades. We have to wait for a better setup. This is not a really, really good setup, in my opinion. And I'd really just want to see if we can either come back, retest this trend line again and hold, or if we can break above important levels of resistance. Right now, that's not there on the SPY. And there's a lot of discrepancies going on in the other indices. All right, so here is the SPY, really, right? Obviously, we're going to have resistance at 450, you know, obviously 453, yada, yada, yada. We're going to have resistance at this upper trend line. That is going to be like a much safer opportunity to go long. If we can break above on Monday 455.47, that would be a much safer opportunity to go long. It would basically validate the MACD's divergence that's going on right now. We're falling on the blue MACD line, yet we're green. And if we can break above this resistance level, that would be very, very bullish. But I don't know if that happens. And I'm going to show you guys why later on in the video. But right now, I would feel way more safer to go long above a close of 455.50, essentially on the SPY on Monday. Okay? Right now, just being patient. We're not losing anything. We're not gaining anything. That's fine. You don't need to always be in a trade. It's good to just, you have to be a sniper. You have to just be patient and wait for your setups. All right, so there's the SPY. I'm going to talk about how bullish the IWM looks right now. All right, so here's a chart of the IWM. All right, I understand that the chart is all over the place, but currently the IWM is making an inverted head and shoulders pattern. So inverted head and shoulders patterns are very, very bullish patterns. So you essentially take the length of the bottom to the neckline, right? So that's essentially what we did here. And then to get an upward target for the IWM, you take the length of the neckline and you take it at the neckline and you put it on top. So this is giving us essentially a target of 220 on the IWM. And this is super, super bullish. The last time we had an inverted head and shoulders, I called the bottom on the SPY back here. This was an inverted head and shoulders, and it worked out perfectly. We went up. All right, so that's what's basically being shown right now on the IWM. And that is crazy to me. It doesn't really make any sense to me. That's like how strong this looks. So I was hesitant to go long over the weekend because of different things that were going on. But right now, the IWM looks really, really strong. So one of the reasons why I think that is because the 10-year yield is going up really heavily. And the Bund, which is the 10-year bond in Germany, essentially is very bullish as well. So what is basically happening macroeconomically on a global scale is the yields are going up much higher. And that could be a bullish sign for banks. So that's kind of what the Bund is showing. And if that's the case, because the IWM has the financial sector essentially in the IWM, it's starting to look a bit more bullish. So, I mean, really, we just have to see what's going on, right? Overall, the IWM looks very, very bullish. Let's see essentially the MACD looks very, very similar to the SPY's MACD. We see the positive divergence in the RSI on the IWM. So you can see the RSI was rising, right? You can see it's making higher lows here. And the first two times we made lower lows in the price. So when the RSI, you can see the RSI is moving upwards like this. This works on shorter time frames. This works on the 1 minute time frame as well. If you see the all right, so look. So if you see the RSI making higher lows, yet the price continues to fall lower and lower, but the RSI is making higher lows like this. That's a sign that potentially the stock or the security is essentially going to reverse. And this was a really, really good signal for the IWM bottoming out. And that was one of the reasons why we went long essentially on the entire market, because we also saw the positive divergence in the IWM. So it looked really, really nice. So essentially, we came back, retested this 23.6% fib. The SPY was at the 38.2% fib. The IWM is at the 23.6, right? We held this level of support, but yet we failed completely at the 38.2% fib at 204. And not only that, we failed to close above the 10 simple moving average as well. And similar to the SPY, we failed to reclaim the prior day's high. So essentially, we closed and didn't reclaim levels of resistance on the IWM right now. And, you know, it's still good that the yellow MACD line is moving upwards. The RSI is basically flat, even though we had a bit of a green day, which means that there's potential room to the upside. All right, so that is a good signal for bulls, right? But again, we're market agnostic. We're just waiting for the good setups to essentially appear. This wasn't a safe play. There was nothing, you know, screaming out at me to go long or short. So that's really it. We just have to be patient on the IWM. Now, let's go ahead and talk about what is like flabbergasting me essentially in the market right now. All right, so we're going to talk about the large tech stocks. We're going to talk about the 30-year bond, and then we're going to talk about the NASDAQ. All right, so essentially Amazon, remember, had really, really good earnings and it helped lift the market up. All right, right now Apple held the 50 simple moving average really, really well. The RSI is flat and the MACD is falling lower, yet the yellow MACD line is showing upwards momentum now. Apple being a $1 trillion company and holding this well, this is a really, really good sign, essentially. Technically, right? But, you know, so I just want to show you guys that. So Apple technically looks bullish, right? Google had really, really good earnings as well. Obviously, there's going to be a bit of a, you know, retracement back down. Held the 50 simple moving average as well. RSI is flat, and the MACD is continuing to move upwards. Yellow MACD line showing upwards momentum, almost above the zero. All right, the yellow MACD line is almost above the zero, which means that upward momentum is going to be confirmed. $1 trillion company, really, really good, right? Microsoft. All right. Microsoft closed above resistance, closed above the 20 exponential moving average. You can see the divergence in the MACD. The MACD is falling lower. The price is basically closing above these levels of resistance. Looks good, right? This, you know, does not look bad, right? The RSI you could also see is clearly moving upwards. But now the RSI here on Microsoft is sharply moving upwards, which is not the best sign. We don't want to see on green days. The most bullish thing to see is if the RSI is flat or if the RSI is maybe even falling lower. All right. So if these two things happen, all right. So if the RSI is flat or if we're falling a little low, yet the stock has a green day, that is very, very bullish on the RSI. The fact that the RSI is basically slanted upwards now, it's showing bullishness, but this is actually sensitivity. You don't want to see this much sensitivity out of the stock when we, you know, have green days. So that's a bit of a warning signal, all right? And then obviously, let's take a look at Amazon. I mean, Amazon had really, really good earnings. It closed green, and it closed above this 31.27 resistance level. Obviously, the RSI is going to shoot up. You know, we jumped up like $400, and the MACD is, you know, moving upwards as well. Overall, tech stocks look good, right? The large $1 trillion companies that are basically carrying the NASDAQ look good. But now, what I was saying on the 30-year bond, essentially, with the Bollinger Bands tightening, right? We were monitoring the Bollinger Bands tightening on the 30-year bonds. And usually, when the 30-year bonds are falling, the NASDAQ falls as well. Because these large tech stocks do not like inflation. All right? And the bonds they don't essentially like inflation either. So so now that basically happened. What I was saying was, as we tighten up on the 30-year bonds, an explosive move is basically going to happen either to the upside or the downside. And currently it looks like we're falling lower. So the fact that we are back at this 153.7 level, right, is not a good sign for the NASDAQ, in my opinion. We saw a complete ridiculous divergence. The market was skyrocketing into the close on Friday, yet the 30-year bond was basically making new lows. We broke down below this 153.07 level to 153.02. So that's not bullish, in my opinion. That's why I was so hesitant to go long, because we saw the clear weakness in the 30-year bond. And until proven otherwise, until other macroeconomic changes affect the correlation between the 30-year bond and the NASDAQ, we're going to continue sticking to this because it's been working. All right. So right now, see clear weakness in the bonds, and that is not a good sign. That's why, so if on Monday we open below 153.07 and we close below this level, I think that the NASDAQ is going to crack and it's going to be bearish. And then once again, if we come back and retest 150.21, that would essentially be, that might end up being new lows in the entire stock market. All right. So that would mean the SPY would hit new lows. That would mean the NASDAQ would hit newer lows. The SPY would break 423 or 422, wherever it fell recently. But this is not a bullish sign for equities, in my opinion. And especially if on Monday, if you go and, on TradingView, you type in ZB1 exclamation mark and you type in, ZB1, whatever. If you look at the price of the 30-year bond and it's below 153.07, that is very, very bullish. Or very, very bearish. And I would just be very, very careful. So it looks like the explosive move that we were monitoring is happening to the downside. And that's not a good sign. So now let's look at the technical indicators. All right. So the indicators on the bond, we just now crossed below on the MACD. So that means technically, there is still some more room to the downside. We are trading outside the lower level of the Bollinger Band. But as we saw in the past, obviously, we can fall for days and close for days outside of the lower level of the B band before we ever get a bounce. All right. So basically, you can see the clear correlation between the bonds weakness and the overall weakness of the NASDAQ, because I was monitoring the weakness in the stock market for the Bollinger Bands and closing outside of the Bollinger Bands. I was showing you guys history about, we just had 5 days outside of the lower level of the B bands, more than the COVID crisis, more than 2000 tech crash and everything. That really helped us go long. So now, this is just the first day that we closed outside the lower. That means that there's still technically more room to the downside. The MACD is showing more room to the downside. And the RSI, this is really bad because we're essentially at these prior lows and we're breaking down to the downside, but yet the RSI is right now, it's only at 35. A oversold condition on the RSI is below 30. So there's still tons more room to the downside on the RSI for the bonds as well. All of those things are basically telling me that on Friday we had one basically rally, and that's basically going to catch a lot of bulls to remain bullish. But then this weakness in the bonds is something to really, really take into consideration. We have to keep monitoring it. So there's that for the bonds. Let's go ahead and take a look at the NASDAQ. All right, so here's the NASDAQ. Remember, the weakness that we saw in the bonds were basically these candles here. And we were calling for a bounce in the entire stock market. And then what ended up happening was the bonds, bounced a bit and consolidated. Right now, it looks like the bonds are front running the equities prices. And I think, once again, if we close below 153.07, and start really cracking below on the bonds, it's going to start showing, disseminating into the equities market as well. So right now, the NASDAQ, technically, you know, it closed above, barely closed above this very important level of resistance here at 357.98, right? We closed at 358.01. So we closed 4 cents above it. All right, cool. We closed above the 10 simple moving average as well. Cool. But this RSI moving upwards like this, the sensitivity that we're showing here is very similar to Microsoft, right? So again, that's not a good sign. That's not the most bullish sign. The most bullish sign would be if the RSI was flat or if it was falling, but the price ended up going higher. We don't want to see the RSI moving up with the price because that shows too much sensitivity. We can see that the MACD is moving lower, which basically until the NASDAQ can close above 362.17, I don't think this is really bullish right now, especially because of the weakness in the 30-year bonds. It's actually kind of frightening because if they got a bunch of people bullish over the weekend and then futures come and we end up falling, this is going to end up cracking really hard, in my opinion. Essentially, we need to see if we can close above 362.17 on the NASDAQ. And we just need to keep monitoring the correlation between the bonds and the NASDAQ, because right now, I mean, bonds are showing weakness, but the market is showing strength. So that's why I was basically, you know, hesitant to front run some shorts into the overall market. I wanted to go short, but, you know, it wasn't worth it. It was basically a toss up, because if on Monday the bonds start bouncing off of that level, and then the NASDAQ starts skyrocketing, and then we end up getting a close above 362.17, that'd be super bullish, and I would alert longs. All right, but right now, the weakness in the bonds, very, very weak, and it's not good at all. So, really, that's really it. We just have to watch to see what's happening. The stock market looks bullish. The bonds look weak as heck. So we need to, and I'm trying not to curse, you know, I don't curse on these YouTube videos, family friendly. So yeah, man, so there's that on the entire stock market. I hope I, helped you guys out on this. Now let's go ahead and take a look at the correlation between what was going on with the stock market and Bitcoin in the crypto market. All right, so number one of the things that essentially made me bullish on the entire stock market was that Bitcoin was staircasing upwards, yet the market was falling, right? And the other thing, we were monitoring the MACD moving upwards, yet the MACD on the SPY and everything else was still oversold. But yet Bitcoin's MACD was above the yellow line, which technically made it overbought, right? So I was saying that this weakness in the stock market, we're going to follow Bitcoin's lead. That's essentially what happened. We ended up bouncing off of those lows and, started bouncing up higher in the stock market. And then the stock market started going higher, Bitcoin started falling. So now, on Thursday, I was saying 36,200 needed to hold. That's exactly what we came and tested. And then since then, we've jumped $6,000. So, clearly that level of support held. And now we need to see if this strength in Bitcoin is going to translate into some selling in the stock market, because this is going to be like the second or third instance that this correlation has held. So we need to just see if this correlation is going to continue holding. Once again, we need to see if we can break above this 42,300 level on Bitcoin. And then this trend line here is going to be very, very important, which is essentially on Monday, it's going to be at essentially 42,600. So if we can start closing above 42,600, which is basically in accordance with this 50 simple moving average, just watch for a close above the 50 simple moving average on Bitcoin. If we can get that, what we need to see, obviously I'm not going to just become blindly bullish. What we need to see is a retest of levels of support to see if that level holds, right? That's number one. But really, if we can start closing above these resistance levels for 2 or 3 days in a row, that can be very, very bullish. So yeah, you know, Bitcoin clearly, the MACD level is now starting to move upwards. This yellow MACD line was not moving upwards at all. Now you can see this big move to the upside is now causing the yellow MACD line to start showing momentum to the upside. And this RSI is obviously going to be a flat because, you know, the price wasn't really moving. So there's that for Bitcoin. Right now we need to take a look at Ethereum. So Ethereum, we can see it clearly broke above this downtrend line, right? But now it's at a major level of resistance at 3,015. So now, the safest play for Ethereum, in my opinion, obviously, if Bitcoin remains bullish, would be a retest of this trend line. From here, that's when you can basically buy and have like a stop loss at around like 2,700. Or you can just, you know, buy on the break of these levels of resistance. So overall, Ethereum was looking more bullish in the, you know, the prior days than Bitcoin. And basically Bitcoin followed Ethereum's lead. Also, Solana was super bullish as well. We got into Solana calls. Super, super bullish there as well. But in general, now we just need to see if this move in Bitcoin and showing the bullishness in Bitcoin will translate into the weakness in the stock market, as the weakness in the stock market was counteracted by the strength in Bitcoin. That was a mouthful, but I hope I made sense. I hope you guys enjoy this video. I hope you guys have an amazing Sunday. And yeah, man, thank you for watching, and I will see you guys Monday. Make sure to follow on Twitter. Make sure to like, comment, subscribe, do all that good stuff. And yeah, man, I'll see you guys later.